of course, we like most what we are doing all day, and what we know best is the retail warehousing sector still. Food-anchored retail warehouse sectors that are not likely to be challenged too much by internet trade, because the food sector, we don't see big issues that it's going to be replaced by internet trades, and all the surrounding services at a decent price in a catchment that doesn't lose a lot of population, or is big enough that it can sustain a little bit of demographic decrease. Those properties we like, and then further on logistic properties. Although we think that there will be a little bit of a shakeout of the internet driven logistic properties, because we don't think that all business models will be sustainable there, that are doing large new demand for logistics space. So we rather tend to go to markets where we have traditional industries like the automobile industry or German construction industry. We favor that to the current trend that you say, okay, we always have to own logistic units in the big cities that are fueled by internet companies. We don't believe that this is the perfect investment. A good mix of logistic also at the big axis and hubs near the big cities is a good mixture in terms of German real estate investment.
Okay, good. Daniel, favourite sectors?
Unfortunately, very little to disagree with you. Well, I would probably apply a good mix of the sectors that you have mentioned. I keep my reservation that I mentioned half a year ago in Paris with regards to the development of larger shopping center units, because I fear that they are the most affected from the internet trade and what is connected to this. If I would invest into such a, maybe today as a core place regarded center, I would have to face relatively difficult to calculate reinvestment issues in future time if that process continues, because the link between shopping and entertainment as an answer to the internet trade may become more relevant. This is why I would probably currently underrate these huge retail units and rather go to smaller one on the other sectors. May it be hotel, may it be logistics, may it be apartment. I would have probably an equal share of the total.
Okay. Yeah.
For us, it's if you see the assets which we manage, and that's exactly what Thilo said. You need to understand what you're doing. With roughly 80 billion euro, 50% is offices. So we have office teams, management teams. So we do 30% retail, 10% logistic. So we roughly 1.8 billion logistic in Europe under management. And this is a very important thing. Currently, what we see in logistic, we have over 10 years teams who are looking for logistic. You need to understand what you're doing, and exactly you need to understand what you're buying. And currently there's a lot of international money and also German money coming into the logistic market and pushing it. So as every asset class, you need to do what you do and need the right management sources. And the other one, what you have roughly 10% residential. So these are the core markets where we're investing. That I think it's mainly keeps it. One point here, normally I agree here, but on the big shopping centers I don't agree, because the big dominant shopping centers I think will be an interesting asset class, and it's something which we like to invest because exactly what you said is, on the one hand it's a shopping, but on the other hand it's a more the entertainment and the atmosphere to go into a shopping center and like the shopping feeling, because sure, internet is coming, but a lot of people like to have this atmosphere and this environment of shopping. Therefore, prominent and big class R shopping centers are very interesting for us.
Okay, good. Marcus, your top sector.
Yes, looking at the market, I would definitely, no matter what the regulatory environment is changing, I think residential is still a play that can be quite of interest if you have the management capacity. On the other hand, as mentioned before, the value add stuff might be the offices you have to work on. As far as the location is okay, the typical mixed use retail, office, residential buildings in the medium to smaller towns that are good located, I think are quite interesting. Other thing, on looking at retail, there are a lot of opportunities also in the German retail market, but you have to be aware of not so much only about the location, but also about what is the long-term future of the location given the demographics we are facing in Germany, because I think some of the locations where you have these bigger retail warehousing, retail parks, whatever, it might be quite challenging for them to survive in an area of an aging population, where possibly mobility by car is not the main issue anymore for a lot of the shoppers to come to their shops. So neighborhood centers might be one of the things that for a lot of institutional investors currently not on the agenda might be quite interesting in the years to come. That given that they are good integrated in the cities and in the areas where they're located. So I think we'll have to more look on let's say the neighborhood characteristics of the investments and on the pure return side or the pure tenant structure of the buildings you're going for.